Today on the CEO Barbecue, we're looking for silver and gold in Mexico, together with Mithril Silver and Gold. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, now this is not Mithril's first time on the barbecue, and if you've missed that, it was the introduction to the company where we talked about John's track record, skin in the game, and a bunch of other stuff, a bunch of the fun stuff, really. And I'll link that in the description of this video. If you've missed it, please go and watch that first. Because in the sake of time, I'm just going to be giving a brief company overview here. And really the strategy for Mithril is mainly resource growth on the Copalquin project, which is still the flagship, and it's located in Mexico, again, the Durango state specifically of Mexico, which is part of the broader Sierra Madre gold and silver trend. Recently, there have been some results from there, and the company's technical thesis talks about structural controls and the potential for what they call a deeper plumbing or feeder zone that could unify and scale really the mineralized system across the package. Last time John and I spoke, he told me he's targeting up to 3 million ounces at this project, but is that still realistic? Has it become more or less? And how much more work needs to be done? Where will the money come from? And why are they buying an additional project? Are all going to be part of the questions that I plan on asking later on. Mithril is listed as MSG on the TSXV in Canada, but they're listed over in Australia as well on the ASX as MTH. The stock's 52-week high in Canada is 68 cents and its 52-week low is 28 cents. With a market cap of just over 77.5 million Canadian dollars and just over 184.5 million shares outstanding today, this is a 42-cent stock with a 50 and a 200-day moving average at respectively 48 and 46 cents, which means the stock is now trading below both of them. No need for a deeper dive on the share structure and all that again, as John and I talked about it extensively last time, but there is a new interim financial statement which shows me the numbers as of September 30, 2025. So I'll quickly go over that here. At the time, the company had in total just over 20 million Aussie dollars in current assets. Most of it was in cash to the tune of $18.2 million. In terms of liabilities, there was no long-term debt and about a 2 million Aussie dollar account payable. Moving on to the P&L for that same 3-month period, the net loss for the period shows up as a $2.2 million loss, but that includes some depreciation as well as a rather chunky $1.6 million share-based payment. So the actual out-of-pocket cost was about 175,000 Aussie dollars per month on average for, again, that period. And that's the admin expense alone, because the exploration expenses here get capitalized, which means it is note 7 that could tell us more about that. About $5.5 million of additions or of expenses were added to the exploration expense in that period, which means the exploration to administration ratio for that 3-month period was reported at about 10, meaning 10 times as much money went into the exploration as what was spent on running this company. In percentage terms, that means that less than 9% of the money, less than 9% of the $5.9 million spent during the quarter was spent on what I would call bankers, lawyers, marketeers, and managers. As always, though, I'd like to remind you that the financial situation for exploration businesses can change quickly, so please visit setterplus.ca and look for the up-to-date numbers yourself. And of course, stick around for the latter part of the conversation where we will talk about money. Now, for this to actually become a conversation, though, I'm going to have to shut up already. And John, I'll give you the word here. But first of all, thank you for sitting down with me today.
It was a pleasure, Anthony. Good to see you again. Nice to be chatting about what we're up to.
Pleasure's mine, and it is good to see you again, especially with the Christmas time coming up. And I know things for you might slow down, but a lot is changing or has changed in Mithril, even though we only spoke like maybe 3 or 4 months ago. But we have a lot to go over today, and it's almost again Christmas. So let's maybe get into it. I'll start backwards actually with the most recent news, and then we'll go over the details of your exploration program at Copalquin. But so you will be bolting on some ground to Copalquin by optioning the Dura property because you believe the system might have meaningful depth potential if the veins continue into the andesitic units that you call. Just for people listening, it's a 100% option, so you could buy the whole property outright at any time over the next 4 years by paying $4 million US, which the vendor can elect to take in shares, partly or wholly, if the 20-day VWAP is at least at the equivalent of $1 per share after an initial payment of $25,000 and 50,000 shares, none of which so far sounds controversial to me. But the timing seems curious to me, especially again, given that you're expecting a resource update in Q1 of next year. So why this property? But more importantly, why now?
Yeah, well, look, this is a good question. So I actually did some work on this property in 2018. So when we were first, as a private company, looking around this part of Mexico, the Copalquin property was actually under an exclusivity. So it wasn't available. It wasn't on the market. So while that was the one we were most interested in, it was from the same vendor. So we did a small program of work at La Dura, got to understand the geology of the system. It's higher up in the system. It's hosted in the upper volcanics. So but we were curious as to why there was this very high grade mine in such a geological environment, and also not that far from Copalquin. It's only about edge to edge. It's probably about 10 kilometers, from the edge of the properties between them. Center to center is probably around 20 kilometers. So it's quite close. It's in the same geological region, and but we did a small program of work there. We did a little bit of drilling. About 1,500 meters of drilling there, just RC drilling. So it didn't give us a lot of useful vein structure sort of type information. It was more just giving us a bit of a grade profile and understanding the mineral assemblages there. So so we kept our foot on that, I guess. We kept it in good, helped the vendor keep it in good standing for a few years, because we did that bit of work there. He was able to, utilize that expenditure for, keeping it in good standing. And then, but we always planned that we would at some stage, once we'd established a lot more work and geological understanding that we have developed over the last few years at Copalquin, we would then reassess La Dura for its potential, and it's a good market now as well. So we figured it was was a good timing to formalize that agreement there and bring that in formally into Mithril's project holding. So it makes sense for us to do it because we can manage it all quite easily from our personnel base that we have at Copalquin and the support town of El Durazno. It's only 5 kilometers by road from El Durazno township. So, logistically, it's a very simple one to manage and do some work on it and advance it. So we don't have a big expenditure commitment. That was important. We didn't want to have to spend, a minimum amount of money over the 4-year period. So we're committed to doing a LiDAR. We know that's been very successful tool at Copalquin. So we've already flown the LiDAR over La Dura. We'll get the interpretation done, and we'll see, if the historic mines and workings or the district is more extensive than what we know currently, and we'll do a aerial mag survey as well over the area. So it's quite terrain-wise, it's quite easy access. It's I've walked all over it in the past, and there's a bit more around there. It's not as isolated as Copalquin was when we first started work there. So it's a good side or pipeline project to have there in the company. It's not suggesting that we're going to change our focus at all, but it is highly prospective. It does have a high grade mine that operated from about 1920 to about 2013 was the last time it produced, on and off over that period of time. But it's 4 levels of workings. We sampled very high grades in there. The vendor of the property did quite a bit of production there from the mid-70s till 2013, so it has production records. So, it's given us good information good metallurgical information. There's also a tailings storage there that has been sampled extensively, and there is a little processing plant there. So it's given us a good database of information as to a mine that's operated very close to Copalquin. So it's a good treasure, I guess, of information, but it certainly has certainly got potential to be, add significant resource potential to what we're doing in that particular spot.
So you say it's not going to change your focus here. What could the acquisition change your timeline though, or schedule for the resource? Because I mentioned Q1 of next year. Is that still the plan?
Yeah, that's still the plan. So it doesn't change that. So we're not shifting people or geological resources from Copalquin to Dura. Dura is just going to be, as I mentioned, the LiDAR survey. We're going to do the interpretation on that. We'll do the mag survey in the first couple of months of next year and interpret that. Then we'll then assess it. Okay, what's the field program we want to do? So if we do a field program there in the first half of next year, we'll get a couple of extra members to the geological team, and they can focus on that. But it won't take resources or focus away from Copalquin. And it's not going to be, it's not a high cost. The field program isn't an expensive program, but is highly effective. So getting out there, mapping and sampling, 2 crews. Mapping and sampling in that area there. We've already done quite a bit of work in the past. As a head start, will give us a lot of good information as to the prospectivity and future drilling there, which may be later next year or early in the following year to do some drill testing there.
Mm-hmm. Well, might be worth stepping back a little more here, actually, on what you said on Dura, and we'll talk about the purchase price more in depth later on, but $4 million total consideration isn't all that much if the property has to offer what you hope that it does. So why was it available to option at this price if it's as good as you believe?
Look, the vendor and I, we've got a good relationship. We've known each other now since 2017, and we did a handshake deal on this, like how we would structure it. We've changed it a little bit. It was actually a bit cheaper before when we were first looking at optioning it. We didn't feel it was the right time to be doing that, and so we let it sit for a while. It really sort of underlines the relationship we've had with the vendor for several years now, and he wanted it to come into Mithril. And wanted us to manage it. He likes working with us. We've had a good conflict-free relationship, and we've always respected our agreements we've made verbally and put into contracts. So he wanted to continue that. He didn't have any interest in really changing to trying to get a better deal from another company, which he probably could have. And he has been approached by other companies in the past, and he hasn't. He's always just said, "Not my intention is to. I want to have this go into Mithril at some stage." And he's a shareholder of Mithril as well,
right?
So he's interested in seeing things progress.
That's what I was going to ask. I mean, is there a royalty, or is there any way that the vendor is going to be tied to it outside of the shares that they're getting for the initial consideration?
There is an NSR, so the same as Copalquin. It's a 2.5% NSR, and we can buy that from the vendor. We can pay it down to 1%. So with Copalquin, it's by paying him $4.5 million US, and for Dura is $2.5 million to pay it down from 2.5% to 1%.
Right. So, okay. Yeah. I've asked this previously as well, but there's no royalties that are owned by management on any of the projects. I assume this one is again arm's length and not like the royalty is not within management in any way.
That's right.
Okay.
Exactly. Yeah.
Yeah. What do you know about this property more now than you did almost 10 years ago when you first worked on it?
Well, I guess in terms of metal prices, the value has changed considerably, and the sentiment towards the precious metals market. So that's a big change, and so that's made it a more attractive property. What we've learned more about it is really just what we extrapolate from Copalquin. So we can see the vertical extent of mineralization in Copalquin is considerable, and it's not unusual, but it is considerable at over 1,000 meters. And we can see up on the eastern side of the property, we still have existing very, very high grade mineralization at the Santa Cruz mine that we sampled a few months ago, put those results out, where we got, inside the 3 levels of workings there, there's quite a decent sized ore chute that was, a good size working for the period that it was mined in the late 1800s. And that mineralization is very high grade silver still. It was around 2,000 grams per ton silver in the 0.7 meter channel sample we took across inside the workings there. And it was about nearly 2 ounces of gold per ton. So it was very high grade, very gold rich relative to the silver. And that's what historically was mined at La Dura. So La Dura is a little bit higher up, but that mineralization has come down from the same sort of precious metals zone or level or horizon that extends from that we see at Copalquin on that eastern side at around 1,800 meters elevation. It's very similar at La Dura. So, we can see that what was mined there historically, about 140 meters depth over 4 levels, does extend down further into the lower volcanics package, which is in the andesites, and that's sort of where we see all the mineralization at Copalquin at Target 1, Target 3, and across the district there.
Mm-hmm. There is some infrastructure on the property. Is any of that relevant to what you're trying to achieve here ultimately, or where does that tie into the whole story?
Look, it could be. It's a small plant, and it's flotation. It's a flotation plant only. So the vendor produced a concentrate there. He got around 85% recovery of the precious metals, and produced a concentrate and sent that off to the Peñoles smelter in Durango, and they smelted there and paid him around 95% of the payable metals there. So it was a good cash generator for him, and so it's given us some good parameters there, which are useful in assessing things. And it's a 60 ton per day plant, and has crushing, grinding, and flotation. So it's quite old. It's not at a standard for a public company to operate. We wouldn't, even though it runs. I mean, the vendors kept it in so we can go and turn it on, and it's been on care and maintenance for some years. But and there's generators there, and it's also connected to the grid power now. But it's not up to the standard for a public company to just switch it on and start using it. It'd have to be a considerable upgrade there. But it could be useful in terms of maybe bulk sample processing and testing some stage in the future, either from Copalquin or from La Dura. So it's certainly a good asset to have there. It's got a tailings storage that's permitted, and it's got all the infrastructure around there. So
it's relevant permitting. So the permits would still work today then?
Look, I think we would have to, again, as a public company, we would do things thoroughly and make sure that everything was properly permitted and up to date. And also the safety standards of the plant were also brought up to date before allowing personnel to go there and work on it. So. Yeah. But that would be what I would see looking at it now. That would be the potential usage of it would be as a bulk sample testing facility more than anything, as a precursor to then building a proper commercial operation at Copalquin or La Dura, or both at some stage in the future.
What kind of permitting do you have to do in order for you to do early works like drill targeting or anything else like that?
So like with Copalquin, we would work under the NOM 120. So we wouldn't be doing a lot of surface disturbance there. So we wouldn't need to do a full environmental impact assessment. So when I did the drilling there, small program of drilling in 2018, I worked under the NOM 120 permit that we had there. So we'd be looking to renew that. So we would just take the same application document that we provided to the environmental authority. We would update that. So it basically has the same flora and fauna and other sort of study work that went into that would be the same. And then we would just be looking at where we would put drill pads if we would need to build any access roads, that sort of thing. That would be what would go into the permit application, and we'd get that permitted.
Right. What about the locos? Does the situation change relative to what we talked about last time?
In terms of the local communities?
Yep.
Yeah, so there's so it's more people live around there, so it's a bit there, and there is the town of El Durazno of a couple of thousand people, which is about 5 or 6 kilometers from the gate to the property. And there are, like with Copalquin, there's a few little settlements over the district there, so it's a bit more. The area is a bit more agricultural. There's pine forest because it's a little bit higher elevation, so pine trees is the main sort of main vegetation that grows in the area. So there has been logging activity. There is a sawmill in the area as well. A couple of sawmills that have produced lumber over the years, and it's a bit closer to the main road. So, but again, when we were working there in 2018, we had no problems from local people there. Everyone was very happy to see, economic activity and would like to see, a mine operate there again. They remember when La Dura was in operation that it was a very, significant contributor to the local economy. And the vendor of the property, because he operated in that area for quite some time, since the mid-70s, and he was instrumental in getting La Dura, connected to other parts of the state, helping get the highway built when that was first built from Parral right the way through to, which has now gone through all the way to Culiacan near the coast, and also the road development, infrastructure, other stuff around there. He was, a big sort of supporter of that and proponent, put some of his own money into it, helped sort of drive the political will to get all those things done. So he's got a very good reputation in the area, and he's well regarded, and that sort of then helps us when we first went there, that we were aligned with his sort of same philosophy, I guess, in not just sort of mining for profit there, but also putting quite a lot back into the community. So he had some private land there in the concession area, and when he stopped mining there, he donated that to the local people. So he's got a very good standing in the community there.
Yeah. What's the water situation for this part or for this property relative to Copalquin?
It's same sort of rainfall pattern. It's probably a little bit cooler there. So it does actually get snow there in the winter.
Oh wow!
You can get snowfall up there. So there are some parts of that area, not actually with the concession areas, but the up around over 3,000 meters elevation. So whereas Copalquin is around sort of say 600 to 1,800 meters elevation, up there at La Dura, it can vary from 2,000 to up to 3,000 meters in some places. So yeah, it is a different sort of climate. It's cooler all year round, but rain precipitation is very similar to Copalquin. So probably similar to Palmarejo up to the north, other districts that have all been developed out there. The rainfall pattern is typically between June and October is most of the rainfall, and a little bit of rain in the winter months, but usually around 1 meter to 1.3 meters of precipitation per year, with most of that in those summer 5 months or so.
Yeah. Well, so would that make your exploration seasonal, specifically in the parts where it snows?
No, it'd be when we did the drilling there in 2018, we kicked that off in January, so in the coldest month of the year, and it was very cold there. I remember arriving there from Australia, the Australian summer, and standing there and not being quite prepared, for how cold it was there, particularly in the shade and the wind when we were first drilling. So, but yeah, you can drill all year round, same as Copalquin. At La Dura, we'll be able to do exploration work all year round, so it's not seasonal.
Well, no one's invited me to go skiing in Mexico, and now I do feel invited. So we might eventually do that. Is it closer to any of that though? Is it closer to any touristy spots? Not necessarily skiing, but or maybe skiing, but anything like that?
No, it's not. I wouldn't say it's close. I mean, you can travel to up the highway. You could get to areas within a day's drive. Like
Not like it's prohibited for
Creel.
exploration, though.
Yeah,
That's what I mean.
no, nothing like that. No, there's nothing around there in that regard.
National parks, some other competing industry or anything like that that is close to it.
No,
No.
no.
Okay.
It's just really, yeah. Just I mean, the main industry that's been in that area is agriculture, lumber industry. As I mentioned, there's a sawmill there, so they had
Yeah.
been harvesting pine trees and replanting. But yeah, that's generally what's been going on in that area.
Really wondering if you're competing for water with someone, because I know in Mexico that can sometimes be a thing in a lot of the
Yeah,
dry countries. So,
yeah. Mostly if you're upstream from an agricultural area and you want to capture surface water and store it in surface water dams, then that's what can be challenging. So, well, I permitted one up further north, called a camper. We were looking at doing an open cut operation there in the early 2000s, and that was what we had there. So that was it was quite a long way from the agricultural area, but there was an area that was going to be affected by if water was going to be captured at that and stored. So we had to get full agreement from the agrarian group that was downstream of that. So that was the competing interest and ensure that they weren't going to be impacted in terms of their surface water that was going to come to them each year for their agricultural activity. So, but here we're at the top of the plateau there, so we don't really have that sort of have problem there.
hmm right. Yeah. Well, again, you maybe we'll get back to it when we talk about exactly what you want to do here. But you have the option to buy the whole thing for $4 million US. That is, what would the property have to look like within those 4 years in order for you to, elect to buy it?
I think it was if it hosted something like at least 500,000 ounces gold equivalent and high grade, if it's sort of the same similar sort of grades what we've seen from the sampling we've done around there and what historically was mined, then if we find at least in one of those deposits something like that, then that's a very attractive, and assuming gold and silver prices sort of persist around the sort of levels they're at now, or could be could pull back a bit from where they are now and still be very attractive. So something like that would be something that would be well worthwhile. Providing some production as a supplement, I guess, to what we envisage to be the case with Copalquin. So and that sort of an NPV on something like that, as long as it's around at least around say 400, 500 million US dollars, that would be $4 million for something like that is very low cost, and so it made sense to do the deal and bring that into Mithril.
What about if we reverse that? Because making a discovery is in large part also about knowing when to walk away. So what are the kill criteria for Ladura?
Look, if we don't see continuity, if we don't see that a long strike, and if it looks like it's just too deep, we could find that we start drilling there and the good stuff is just a bit too deep, and we don't want to go and spend a lot of money drilling deep holes in the first program of work. I think if we, at the very least, if we demonstrated that there is a big system there, and that the Ladura mine is just a part of that system there, and we've seen good mineralization up to, I think it was up to 1.5 kilometers further to the south of there, and there's also there is a structure that runs diagonally across the district there that's been mined historically in different parts. So it does, at this stage, it does look like it has got the size potential there. So, we would have to be just very disappointed with the exploration results, to walk away from it. But I think it's already demonstrating it's got potential there. If we do have a successful initial drill program, then that's going to give us the confidence then to continue on with it. If we don't, then it might make us sort of just sit there and maybe just keep focusing that money onto expanding Copalquin. So
that's a good.
So really, it's early days, and it certainly warrants doing some more work there. So put it that way. So it's got all the, it's not a greenfields exploration property. There's quite a bit that we've already looked at there, and it is similar to Copalquin. There is high grade mineralization all over that concession area of 20 square kilometers.
That's a good summary, and really the most important part for me there is to know or to see that you're actually thinking about this, because it is just so often that we see companies kind of falling in love with projects and being like, no, this has got to work, but sometimes the project is telling you that it won't. So I have to know that you know when to walk away, essentially. You said there is work to be done there, and it warrants more work for sure. What is it? What kind of work are you doing there? Maybe walk me through kind of the next steps for the property from here on out.
So the important thing there would be to build up the geological map. So we've seen how important that is at Copalquin. So this year we've really expanded our geological map. We've done detailed mapping and sampling over about 20 square kilometers within the Copalquin district now, or continuous, and that's really given us, vital information there and understanding the geology and why this district has hosted such high grade and widespread gold and silver all over the district. So we've also done some detailed, I guess, laboratory level work, where we've looked at with electron microscopy, have looked into the minerals, looked at, the guys who do that work, they can build up a picture there of what temperature the minerals formed at, when they formed. We can build up a picture there of when the different events happened, where's the likely source of the mineralization. So we build up a picture now of understanding that there is a feeder system there. We know there is feeder mineralization at those levels where we've drilled at Copalquin. And so that's going to be useful information to then extrapolate across to what we start to do at Dura. So we'll be doing that same key type of work early on to see if there's evidence of a much bigger system there than what we see there at the surface with all the historic mines and workings that are in that concession area. So we'll get onto that in the early days, and if we don't see evidence of that, then it makes us reassess it and think, well, what do we want to do here? Do we want to continue with it? Does it look like it's got the potential for being significant resources or not?
When is all that work going to happen? Is it something that you think 2026 is going to bring? Do we see it drilled in 2026? What do you think?
It could be. So we could, we want to put, we want to have at least two crews there working in the first half of next year. So we need to do LiDAR first. We need to do the mag survey. That'll give us the first picture of it. And then we'll say, okay, we'll have a certain area that we want to do some detailed mapping and sampling, and we'll have one or two crews go and do that and build up that information. It's not expensive. It's quite it's very cost effective, and we can do it fairly quickly. And that's the first half of the year is the ideal time to do it. So we don't get any rainfall around that time. So the vegetation's a bit less, so you can see a bit more what's going on. The LiDAR is great in that respect because the LiDAR is not affected by the vegetation. That's why it can pick up all those detailed surface structures and the topography in high resolution. So that'll be very important for us. And then, that'll be the point that by the middle of the year, we would then be, okay, where do we drill? What do we want to do with this? It's looking very prospective. We can see, maybe half a dozen good target areas, and we'll start to build up the plan from there. But we have to do that first. The first 6 months of the LiDAR, mag survey, mapping and sampling, and start to build up a geological picture there.
Mm-hmm. what percentage of your exploration dollars is going to go toward that versus just working further on Copalquin?
Look, it'd be minor compared to, like, say, the LiDAR survey will cost us about sort of 50 to 60,000 US dollars in total. Similar for the aerial mag survey, a little bit more than that. So, and then we told the vendor we would spend a minimum of 200,000 in the second year. So we would do the LiDAR mag survey in the first year, 200,000 the second year. So that sort of puts it into perspective as to what we're sort of thinking there in terms of dollars spent compared to Copalquin. So it's really only a fraction of what we're planning to spend at Copalquin.
Mm-hmm.
So less than a 20th or a 30th of what we're planning to spend at Copalquin.
Okay. I assume you're going to have regular updates on it, but when do you see? Because not a lot of the early work is newsworthy, I suppose. I mean, and then you could go into what's material and what's not material. But when do you think you're going to have some news on that?
I think once we start doing the mapping and sampling, so certainly by maybe in the second quarter of the calendar year, 2026, we should start to have some channel sampling results coming out and start to sort of build up a bit of a picture as to how extensive the mineralization is across that 20 square kilometer concession area.
Right. Okay. No, so more regular updates on that would make sense. The other side of that budget coin that I asked you about is Copalquin. It's Copal. I'm saying it wrong. I mean, I hear you saying it better than I do, and I'm kind of getting.
Think about it as a K, Copalquin.
Copalquin, just like that.
Yeah.
I think I might have said it better last time, and now I'm calling it Copalquin. I might end up calling it Copper Queen, which actually sounds better. But no, you've done quite a lot of work there as is, and the most recent update says you now have a better geological understanding of target one, and you call it a robust and predictive. And after the westward expansion drilling, that is, which I will also have some questions about that later on. But what does having this better geological understanding right now mean for the future of the project more specifically?
It's important for Target One because what we have there, when we did the resource there, it was a maiden resource. It wasn't, a huge amount of drilling went in there. It was mostly an inferred resource. So I think there's about 28% of the tonnage was indicated, and but it was a first pass look at what really just giving us indication what potentially that Target One could host there in terms of resources. So we, when we went back there to start drilling that with the goal to upgrading that and putting out a new resource on it, and getting a lot different people. We had a complete change of geological leadership there, and also people on the boots on the ground as well. And when we came back to drilling there in 2024, and so what we learned was that there was it was actually not so much that it was more complex, but there was a geological rock unit there that wasn't as it was logged in the first couple of years of drilling there. It wasn't part of the host rock that hosted it. It was actually a rock that came through after all the mineralization formed there. So it was a post-mineral rock unit that sort of pushed up into there, a rhyolite intrusive. So not unusual to see that in these types of deposits, and it's pushed through. So as we progressed the drilling there, we had to not only model the mineralization, but we needed to model the post-mineral intrusive rock unit that made some of these rhyolite sills and moved things around a bit. So it didn't take away the mineralization; it just moved it. So there was a couple of places where, particularly out to the western side, where some very high grades were intercepted in the previous drilling, and when it was drilled down dip of that, it hadn't hit the same structure, so it was a bit puzzling. And now that's explained by this post-mineral rock unit. So the structure's still there. We just got to look offset to it, drill it, and that's what we've been successfully doing over the last 12 months of drilling there. So we've built up a different model. It's much more advanced. We've got a lot more drilling in there, a lot more geological input from all the work we've done. And And so that's why it's a more robust and predictive model. So we're able to sort of, when we drill it now, we can see what we have in that particular drill hole, and we know what's going on, and we can then plan the next hole, whether we go directly down dip of that, or we have to go off a little bit in a different direction there if it's been moved away by this post-mineral intrusive. So that's why it's a more predictive and robust model that we have there, and which is important for its future mineability when we do finally do the mining study work and the other study work to sort of have this progress to development.
Do you still think that targeting 2 to 3 million ounces here is reasonable, or has what you now know changed your target as well?
No, I think that still hasn't changed there. So we can still see that as a minimum. I think the thing that's probably changed there and has got us more excited is the petrography work we've done across the district. So that's looking at in detail at as I mentioned before, the temperatures that things had formed at, understanding when this epithermal system formed, what were the different stages there, where did the minerals come from, why did they deposit in a particular horizon, that sort of thing. So we've built up a good understanding of that, and we've got a very experienced gentleman working with us on that. He knows a lot of these districts all over Mexico in the Sierra Madre gold silver trend in particular, and has seen a lot and written papers on it, or co-authored papers, and is considered an expert on this type of system. So he can see evidence there of the feeder system, which is what we've always thought. Because my question has always been to the geologists, what's the chances of we've got all this widespread gold and silver over the district and there not being something significant that's sort of that's created all this or responsible for it? And they will say, well, there's no chance of that. There has to be a source of all this, a conduit system that we can see evidence of that running right along the district for several kilometers. We just need to understand the faulting and the other things that have happened, over the 30 million years or so that this thing, when it first formed, and understand that to then vector in on that feeder system. The gold silver ratio is important for that. We also see evidence. This is predominantly a low sulfidation system, but we see intermediate sulfidation epithermal system mineralization there as well, particularly down the southwest corner. So we see the evidence there that there's a big, long-lived, multi-event epithermal, hydrothermal system there at Copalquin. And we're just, besides getting that sort of 2.5, 3 million ounces resource potential in the top 400 meters or so at the various locations across the district, we've got that feeder system that's responsible for all of that, and that's what will then change at the scale of the property to being a multiple of that initial target.
Mm-hmm. Part of that is that Refugio and Zaragoza are along that same northwest structure, the Copalquin structure, right? Which you've now also interpreted to be the case, or to be a fact, essentially. But where's the evidence, I suppose, is what I'm asking, or what makes you think that these two tie together structurally and also paragenetically instead of just being geometrically similar, I suppose?
Look, we've done some drilling at Zaragoza, so we did a small program of drill holes there. Really, they were just scout holes. We drilled under the workings, 160 meters below the Zaragoza workings, and we hit a structure there. We had one of the samples that was 0.6 of a meter, 4.4 kilograms silver, and it's a very high grade silver. But what was interesting was the gold grades were still very good, 6.4 grams gold. So, and that looked like more intermediate sulfidation style mineralization. It was very, very black core that had a lot of sulfides in there, and also it was a bit higher than normally in molybdenum as well. So it was interesting to see that. And then the mapping and sampling were done across there. And also we did some drilling down further deeper into the valley at the historic Copalquin mine. And we hit some some multi-phase banded quartz vein down there. That's the type of structure we want to see, or the type of mineralization or vein that's part of the feeder system. That wasn't big enough on its own to be responsible for all the widespread gold and silver. So it's probably a splay coming off that main feeder system, but it was down there, and we can, with the mapping and sampling we've done down there subsequent to that, we can see that that continues on further to the southeast, and then continues on up the other side of the valley to the 4-level San Manuel mine, which was a subvertical structure, a couple of structures there that were mined historically, and they're almost directly north-south trending. So we can sort of see a north-south going to the northwest, continuing through the Copalquin, up through Saragossa, and then up to Refugio at Target 1. So there's a 2 or 3 kilometer structure that's running right through there, and we're just calling that now the Copalquin structure, and we can see that that's one of the key features of this district. So it's not the only key structure there. There's other ones there. There'll probably be multiple of these northwest trending structures across the district, and but that's the first one that we've actually starting to see it all coming together and supporting with the work we've done there, that there is a structure running right across the district there.
Mm-hmm. Copalquin is a structure, by the way. You also write that it remains, again, open along strike and down dip as well. And I suppose twofold question here. Are you more confident in the strike extension or the depth extension? And how much / where exactly do you step out from here to keep testing it?
We plan to do, we want to get we haven't done the aerial mag survey yet. So we wanted to get that done before the end of the year. And that's been, the contractor that was going to do that for us had some technical problems with their equipment, and it's been taking a bit longer than expected to get them mobilized to site and do that work. So we're looking for some alternatives. So that's an important part of the whole picture there we're building up there. We'd like to get that done before sort of really drilling some of these, what we can see on the geology map and the LiDAR that we've done as well, or both together. We can see some really that Copalquin structure. There's also a few other spots going further to the east. There's an east-west structure that runs across the district. There's a few of those. There's 3 places there where there's some faulting, and it looks like it's a northwest structure cross-cutting this east-west structure. And we know from, just not just with Copalquin, but other districts in the Sierra Madre, and our experience at Palmarejo too, is where you get these interaction with different structures. You can get these dilation zones, and they potentially can host, quite big volumes of mineralized rock. So they're obvious targets to drill test, but we want to get just a bit more other information that's readily available, which is doing the mag survey. That'll help us pinpoint that and drill sensibly, and not just drill wildcat type holes. We want to have all the right geological support information before we're going to drill some of these, what could be sort of 500 or 600 meter deep holes. So we want to, those can be, they might cost, with assaying and drilling, $70,000 odd. So we want to make sure we put those in the right spots. We don't want to sort of just drill and hope for the best.
That's actually not too bad. So what are you paying per meter? Like 100 and 150 something?
Yeah, all up drilling cost is around about 170 US dollars. I mean, it depends on how deep they go, but gets a little bit more costly as you go deeper. But that's our sort of drilling cost.
Assays
with
and
assaying and assays and support, water pumps and all that sort of thing. So it's a good, we've got a good drill rate there, and we try to drill as efficiently as possible. So the terrain there doesn't lend itself to doing, big wide space grids. We have to sort of be quite targeted in our drilling there. Yeah. So we've got to be quite efficient at it.
That's pretty good, actually. 170. Does that include a seasonal ski pass for the drillers as well?
They would hope. I think they'd prefer the warmer weather. I don't think there's any interest in going to the cold.
Seasonal beach pass, because the beach is free, right? And again, this is all tied to that target 1 and the resource update. What category uplift are you aiming for? Like inferred to indicated, and Yeah, what drill spacing would you need for that, and what is the uplift that you're hoping for?
I think what I would ideally like to see there, and I don't know whether we're how close we are to that yet. We're just starting to do some work to take it from the geologic model to then start building, getting as a precursor to seeing where we have to do a few more holes there just to make sure we do bring everything into classification. So there could be some stuff there that looks like it would come into resource, but it's not quite detailed enough drilling there for it to be called at least inferred. So we're not necessarily trying to get as much of it into indicated or measured as possible. We want to get, we understand that will still be quite a bit of inferred resources there. And because we've learned a lot more about the geology there and this particular deposit, we're really sort of not starting again, but our geological interpretation and our grade envelopes are quite different to what they were when we first did the maiden resource. So it's hard to sort of, compare it to that, but I would like to ideally see at least half of it in the indicated category. So more than double what we had indicated before. So that would be a significant step in terms of having something that's looking developable and being able to do some feasibility type work around that. We've already done some metallurgy, we've done some mining study work, so we would look to sort of upgrade that. So ideally, I'd like to see it at least around the 800,000 ounces gold equivalent. We'd probably have to drop the cutoff grade a bit. We used a 2-gram gold equivalent cutoff grade when we did that resource in 2021. With the metal prices as they are now, we would probably use something around 1.5 grams, maybe a little bit less. And that, of course, will affect the grade. I don't expect it would make a huge difference in terms of bringing lots of lower grade stuff into it because it is fairly geologically constrained. It's not like there's a lot of low grade stuff sort of halo around the mineralization that would come into it. So it's fairly discrete. You're either in the vein or you're not. There is a bit of a stock work in some areas, but mostly it's sort of a hard cutoff being in the mineralized rock and not being in the mineralized rock. But it'll be a good, I'm expecting to get a good robust resource. We're not too focused on trying to get a particular number. We just want to get a good quality resource. We know it's going to be a good number and it'll be very attractive in terms of when it comes to doing the valuation on it, an NPV sort of thing, particularly at the longer term sort of gold and silver prices that people are using in recent sort of study work. It'll be a very attractive value proposition for just the first target area in the district. And that'll give analysts the opportunity then to, look at that and say, that's the sort of resource that you've got there, that first target area. You've got another 2, 3, 4, 5 potential target areas there in the district. If they're similar size to that, then you can sort of start to build up a picture of a valuation as what is the potential valuation for the Copalquin district in terms of its multiple deposits and that being the sort of the starting place.
Right. You've also reported some channel sampling too, though, which I think were very high grade at 16.8 grams of gold and 625 grams of silver, but it's only about a half a meter. So going back to the veins that you talk about in the type of deposit that you're dealing with, these channel sampling programs, how representative are they, or how helpful really are these hits in terms of drill targeting, given again how narrow they are?
Look, there's it depends where they are, of course. I mean, what we see at Target 1 is that we see all that sort of mineralization is like a diluted version of what we see as we go down deeper. So, the veins formed first, it all got broken up and brecciated and had subsequent mineralization events after that. But, there's lots of pieces in there in the breccia that have come from, a quartz vein down deeper that's then been broken up and resolicified in the top 300 or 400 meters there. So really like sampling in those workings and the channel sampling, we're really just getting an idea, is what was left behind from the historic mining. And it's really just an indication of what we expect to find if we go down deeper. It's not necessarily an indication of how wide the mineralization is, but that it has deposited there at that level, and now as we've built up the um, the more detailed geologic picture there as to how these various mines and workings of mineralization that form closer to the surface, we can sort of just use it as near surface geochem as to building up the picture of what's created all that, what's the source of it all. So seeing those high grades all over the district is good to see that there is a big system there. These aren't just isolated little pockets of high grades that are just formed there, and there's nothing else sort of connecting it all together. So, So it's really like it's building up surface geochem. A lot of places used to be looking for anomalous gold and silver values, and we see a lot of that, of course, as well. But seeing these discretely high grade veins all over the district is very, very important in building up the bigger geological picture. As having a big gold silver system there at Copalquin.
We've talked about the average vein width before being about 4.5 meters, if I remember correctly, which you believe supports underground mining. How consistent is that width across those new western extensions, or how consistent do you think it's gonna be?
Look, we'd need to do when we finish the resource, we'll do some mining study work to sort of firm that up, because that was determined on the maiden resource. So when we did a mining study on that, that's what the average sort of vein width there was, 4.5 meters. So that means there's still some stuff there that would be down to 2 meters, 2.5 meters, and some stuff there that was quite a bit wider than that. So one of those that most westerly hole we put out a couple of months ago was 8 meters, just over 8 meters at 10 grams gold equivalent. And then we've had other intercepts out there, 18 meters at 13 grams previous to that. So there's some fairly wide intercepts there, which are obviously going to be very good from a mining point of view. And there'll obviously be some very narrow stuff. There might be some stuff there that's 0.5 meter to 1 meter, but and we'll have to manage those as in terms of dilution and what we'd have to do to make those mineable, and what the grade would be as to a final mine grade there, and that all gets factored into at the time when there's a mining reserves there estimated for that particular deposit. So you see some other deposit. I mean, a good example of that is probably Las Chispas, which is was Silvercrest, and that was quite narrow vein there. And when the mining reserve was estimated on that, there was the tonnage went up higher than what the resource was, and that was because the veins had to be bulked out to be mineable width and to a minimum mining width, but still was still a very high grade and attractive mining proposition. I think it was over 10 grams gold equivalent even when it was diluted. So it's more about what is the diluted vein width, mineable vein width. That's what's going to be there. That's the important thing that's going to drive this. So if you're getting 0.5 meter and it's it's up to 1 ounce gold equivalent, well, you can mine, even though it's only 0.5 meter, you can mine it. It won't be at that grade, but it'll be at a diluted grade, but it'll still be very high grade and very profitable.
And I suppose the grade is related to some of the later findings as well that you have. That last technical update also talked about or notes that petrography is confirming a district scale model with an over 1,200 meter vertical extent, is what you call it. Do you expect there to be grade zonation or metal zoning here based on the mineralogical or textural context that you've seen so far?
Yeah, look, in a broad sense, there would be, and it's typical of these epithermal systems. We see and we're seeing it in the drilling that we've done down at Target 5, which is much lower elevation, where we've got veins in the granodiorite intrusive down there, and that's where we see evidence of the intermediate sort of sulfidation type mineralization coming in there. But we've got, we're anywhere from, in this also in the channel sampling we did and in the drilling, we've got, typically the higher sort of grades around 1.5-2% lead and zinc in some of the samples, and high silver grades, and the gold grades typically might be half a gram or a gram, that sort of level relative to those several hundred to a couple of thousand grams silver, for example. But what we've seen down there in a few places is the gold grades have been particularly high. So up to an ounce or a couple of ounces per ton gold, and then still with 3 or 4 kilograms of silver. So that was a bit of a surprise there, seeing the gold grades persisting at that sort of elevation. And then in contrast to that, up the other end of the district, we got Santa Cruz mine at 1,800 meters, and we still have high silver grades up there, a couple of kilos per ton in the mine that was mined, what was left behind in that historic mine there. But still, we're seeing over 1 ounce, 2 ounces sort of gold grades there per ton. So, and then in between there, we've got the sort of mineralization we see there at the Target 1 area, where it's more gold rich. It's a lot of silver there, and that sort of horizon there is what we'll be targeting at Target 3 when we start drilling that in January next year. So that's sort of in that, from that petrographic study we've just done and we just got the report on, is that sort of highlighting Target 3 as being in that sort of horizon to have very high gold grades as well as the high silver grades, but in particular the high gold grades relative to the silver. So we expect to see the same type of resources developed there as we have at Target 1. And difference between Target 3 and Target 1 is it's the area of historic activity and also the surface veining that we've been mapping on the surface is quite a bit more extensive. So it looks to be quite, what we're seeing at the surface is quite extensive and bigger. And we don't expect we're going to have to drill particularly deep holes there to start to sort of put together and start to build up a model for that particular target area. So we're keen to get some holes in there early in the year and get a start there and start to develop knowledge of the structures, the geometry, and start to build that and see that as potentially becoming fairly quickly a similar sort of resource potential as what we have at Target 1.
That's actually maybe a good point to talk about Target 5 as well and how that ties into everything, because you had some channel samples there as well. No assays, I think, yet, but how does Target 5 tie into all this?
Target 5, we put out drill results for the first 7 holes we drilled there. So we got very good grades. We got good widths near the Apamal workings, it's called. That's the name of the workings there. So there's a structure there that we've mapped for we've got about 2 kilometers length now. So there's a number of these parallel structures there. That's the main one we've focused on so far with the drilling. So we've drilled 17 holes along there now. We've got assays back for the first several of those, and we put those out. We're just waiting for assay turnaround times have been very slow, and particularly when we have higher silver grades. So when it's over 100 silver or over 1,500 silver, again, it has to go through another assay method. So, and the lab that we use, ALS, we did the sample preps done in Mexico in Chihuahua City, and the pulps are sent to North Vancouver, and that's all done in their chemistry lab there, and that's where they do all the assaying. So they've had a lot of work there, obviously, with everyone's cashed up, and and it is the North American exploration season as well. In Canada and some parts of the US, that's the intensive season is in the summer months. So yeah, assay turnaround times have gone to 4 or 5 times what they had been prior to the summer. So we've been waiting for a lot of results to come through. We've still got some we're waiting for before we put out an extra news release there. But we've done 17 holes there now in that particular area. We've done another 5 holes at the Tasalera mine, which is we had very high grade sampling results there in the channel sampling in those workings. So that looks like it's all persisting down there. And then we're just waiting for some assay results from another mine area, Candelaria. We did put some channel sample results out from there not that long ago. And that was again very high grade, multiple kilograms per ton silver and very high gold grades persisting down there. So that's 1.2 kilometers along between those 3 mine working areas. So we're sort of starting to put together, if we get a few veins there, 1.5, sometimes up to 3 meters, 4 meters thick, and then going further south there to another area, which extends to a total of 2 kilometers. We could potentially start to get to a point where we could, put an early stage resource there, and that gives us a bit of an idea of potentially what that Target 5 area could host. So that's just one structure running along there. If it is continuous, so we do find it's continuous and it is sort of, a reasonable sort of width, thickness, good gold and silver grades, we could then sort of, if we can put a resource together on that, then that can give us an idea, with multiples of those across the 2 kilometer by 2 kilometer target area, could start to make that look quite significant as being a resource contributor over the next 12 months.
Mm-hmm. Well, what is the drill pattern going to look like once you go back there? How do you want to drill it? What kind of step outs are you thinking about? How much more growth do you think can come from there?
I think, the obvious target areas we're drilling, close to the workings. So where we see workings, and there's, there'll be could be several levels where they've gone in horizontally, in the side of the hill. And so we sort of get a bit of an idea of what the orientation of the structure is. So we tend to start near those. We try to drill about 100 meters below those workings. So we want to get a meaningful step out from the workings there to sort of get an idea of what we want it to be a reasonable sort of size there. There's no point in drilling, 10 meters below the workings. We probably are going to get something very high grade there, but it doesn't do a lot in terms of, adding volume to potentially what could be there to host resource. So we tend to step out a bit. Depending on the continuity that we see there, we could find that, 50, 60 meters sort of between drill holes is sufficient enough to get into inferred category and start to build that up. But it depends on what we see. We need to get all the assays back really on this first program of work, which we expect to have at least by the middle of January. We should have everything up to date, and then we can build up a picture of continuity there. With the structures, the geometry, and importantly the grades along that 1.2 kilometers that we'll have drill tested.
Right. And what about target 3 in that case, though?
Target 3, because we've done a lot of drilling there. The guy that's doing we've done the 3D model. The guy that's sort of looking at it to get it into shape for resource estimation work is giving, is starting to generate statistics as to what sort of top cut should be applied there to the high grades in particular. Statistically, are they outliers that they need to be cut down to a top cut level, which that'll influence the overall grade. And put some sort of conservativeness into there. And also, I think we've got a good handle as to what the drill spacing needs to be there for indicated and inferred. So we don't have too much, we don't expect any surprises there with that. But as I mentioned before, we can see there are some areas where we need to just increase the density of drilling a little bit to make sure we do pull those potential blocks into a resource category, at least into inferred.
Why not delay the resource though, or the resource update to give yourself more time and to do more like infill and test some of these new targets? Because what we're talking about here, like target 1, 3, 5, and all the other things, and the new geology, it sounds to me like, why not delay it?
Yeah, look, it's because I think we've got so far down the line with it, and we did. Part of it was of our own making. We made a commitment to doing that. There were investors that wanted to see that. Back in 2024, we said, we thought we were going to get that done sort of early this year. And as I mentioned before, we found it was a bit more complex there with this post-mineral intrusive. So we were getting some good results as well when we were drilling to sort of, to uplift in some areas and fill in some gaps. We started getting some really good results, particularly on the La Soledad side. We're getting some very high grades persisting down along strike and at depth. So we wanted to follow those up and make sure we could bring those in. So, it's been a bit of a process. Sometimes you drill and it sort of makes you scratch your head a bit more, and you have to do a bit more follow-up drilling to work out what's going on in some places. But it's going to be important in understanding the bigger picture we have there. So while it's, maybe it's not the ideal thing to be focused on there at this stage of the exploration program in the district, it is giving us good background information, which will be useful for extrapolating that into other target areas that we have across the district. So it hasn't been, we don't want it to be a distraction in terms of like we have to put all our effort in there to getting this resource done. We've just got one drill turning on there, and that drill has done some other drilling work that's sort of, I guess, geological control work, and did drill down at some areas down at Saragossa, which is in that Target 1 area, but more to the south. So so it's all been part of the process there, but we would like to get a resource out there and just draw a line under it and just put that out there, use it as a basis for other work that we're doing across the district. And we're so close to doing it now, we should, it would be, a good milestone to reach there, to have a good, robust first resource there at that first target area in the district.
I'm really asking because I'm thinking, doesn't that put a bit of a limit on you? Isn't the market going to see you as, oh, Mithril is that, whatever that number might end up being in the end, and maybe paying less attention to the upside? How do you think you're going to deal with that?
I think it's just really just making, in terms of how we manage the news flow on this. So that's why we very simply just called them targets 1, 2, 3, 4, 5, 6. So it's clear that the target 1 resource is just the first target area of a multiple target district. So that's the messaging we want to get out there. We don't want it being called, this is the resource for Copalquin. It's the resource for target 1 in a multi-target district scale property that's called Copalquin. So, I think we've got that clear in our messaging in all our news releases. We have a map there that shows all the target areas across the district, and this is really just the first one to get going. That really sort of says the district is the potentially developable in the future. It's going to have a high grade, very attractive resource there that just at the first target area. And then you can look at, say, target 3 in particular. That's another same sort of vertical horizon as what we have at target 1. So potentially that's another one that's going to be coming into the fold in the next 12 months of drilling there.
You've previously told me that target 1 was mostly a shallow target and that the incentive to chase growth at depth early on was limited. Has that view changed, and where the best ounces per meter sit? Has that changed since we spoke?
No, they've still certainly got that upside there. And, that with that petrography study work that was done and that hole that we drilled out there to the 300 meters to the west, where we got that 8 meters at 10 grams gold equivalent, that had evidence of feeder style mineralization in that vein there. So we've got to get that geometry right on that structure there, understand the rhyolite intrusive that may have offset that in some places, and then use that to vector in on the high grade mineralization that's down deeper. One of the holes we drilled there, hole 77 that we drilled in the middle of 2021, we hit 8 meters at 80 grams gold equivalent. That was very high grade intercept, more intact vein, and that's the type of vein. It was almost 500 meters down hole that intercept, and it was just by chance that we hit it. We weren't targeting that. The target was quite a bit shallower than that, and we hit that target, and we thought, well, we're already there with that particular hole, and we were seeing interesting host rock there. We thought we'd just keep going down there until we ran out of drill rod, and then we hit that right down near the bottom of the hole. So we know that type of very, very high grade mineralization exists down at that horizon, and all the work we've done over the last 12 months has helped us get the confidence and build up the picture there to to know that that does exist there, and we'll be targeting that with some key holes that we're planning to do in the first half of this year, or first half of 2026.
You don't have to raise money before the resource, as far as I understand it, though. How much money do you have right now?
We've got end of the last quarter, we had 18 million cash, so we're burning about a million Aussie a month, just over a million Aussie a month, and so we're fully funded to do. We're aiming to do about 25,000 meters of drilling in the first 6 months of 2026. So we've got a good program of work. We want to get all the assays back from the drilling that's been done up to now. That's going to help us. So we'll probably change the drill plan a little bit, but that's the figure we've got in mind now with the plans we've got between Target 5, completing the drilling at Target 1, extending Target 1 out to the west further. So we've got the Argyle workings, which are about a kilometre further to the west, where we got some very good results there when we drilled that in a couple of years ago. We only did 3 holes there because then we didn't have a road going out there, and we flew the rig out there with a helicopter, did 3 shallow holes, and then we flew it back again. This time we've got a road connecting it now, so we don't have to do that. But we want to follow up that, because that was very good looking veins that we hit there, and they were high grade. There was shallow drilling. There's some historic workings there. We found some other workings there that weren't even picked up on the LiDAR. And so that's sort of developing into an important area to do some more work on there. And then we'll do the drilling at Target 3, and then we've got the Copalquin structure type drilling that we want to be drill testing as well in that first 6 months. So there'll be Target 5, Target 1, complete the resource drilling there, extend it out to the west. Target 3 is a new target area we'll start drilling in January, and then the Copalquin structure and other key features there that we'll be testing to sort of start to develop the conduit system that's responsible for this widespread gold and silver across the district. So where I'd like to be, after the first 6 months of drilling in 2026, I'd like to be able to, our objectives will be to have a high-grade resource in Target 1, on our way to having at least 2 more target areas that look like they're similar sort of size, at the upside of out to the west of Target 1, and then have enough drilling at other key structural points in the district that then show that we've got a handle on the bigger picture there as to why we've got this widespread gold and silver all across the district. So, start to then clearly see that it is at least a 2.5 million ounce sort of gold equivalent proposition in terms of resources, but with upside of that with this with getting onto the bigger geologic picture there that's responsible for all that.
And I asked you about money, John, because I was thinking what you're telling me here sounds like a lot of work. It sounds like it warrants a lot more work as well, but how much is that going to cost? So that's where I'm coming from. How much money do you think you're going to have by the end of next year?
Look, if we don't raise any more money, if we just if we do a drill plan, by sort of August, September, we'd still have a healthy cash balance for a junior company. So we don't want to let things get down too low, of course, but we expect to have a good news flow of drill results and exploration results in the first half of next year. So like we did at the end of 2024, and then in July this year, we put a good amount of cash into the bank on the back of demand that was coming from particularly from global mining institutions, because 41% of our stock is held by global mining institutions now. So it's a good shareholder register that see the same resource potential or district scale potential that we see there for Copalquin, and are there for the longer term. So we need to back that up with some further results that support that, and then I'm confident we'll have the support there to keep funding this and do the work that we've got planned, not just in the first 6 months, but in the second half of the year.
That also includes adding a third rig then by early 2026 at Target 3?
That's right. Yeah, that's what we've planned now. So we've got the plan is to have 1 drill rig at Target 5, 1 starting at Target 3, and 1 rig completing the drilling at Target 1 resource area and then extending that out to the west. And then between those 3 drills, we will then have the capacity to do some of the district scale or plumbing system type drilling, these key structures across different parts of the district to do that work as well, depending where they are located in where those compared to where those rigs will be working at that particular point in time.
I'm just now realizing you also have some options slash warrants that are in the money right now, or will be in the money shortly. How much money do you think might come from that over the next call it 6 to 12 months?
I think the last time I worked it out, we had around $7 million in the money warrants there. So and then there's another 14 million that are exercisable at 75 cents. So they're not in the money yet, but they could be, in the not too distant future.
Yeah. How much? Well, actually, I was thinking about this earlier as well. Like, could it happen so that you maybe never have to raise money again? And I'm obviously speculating here and very forward looking and everything. But could this resource update that you have coming, which you have the money for right now, as you just told me, could that be the threshold for a potential acquirer to get interested? Would that make you a takeover target?
It could do. I mean, we're not really, focused on that or thinking about that. I mean, like with Palmareca, when we progressed that, I mean, that was an exceptional project there, and that we got very quickly got a very high grade and a large resource there, and the market was such that we were able to raise the money and do the development there. And we were halfway through the construction there when we had a lot of companies then wanting to acquire it. It was fully de-risked. It was a large resource there, and we demonstrated there was, we found 2 other deposits there at that stage using the model that we'd developed for Palmareca deposit, and then that then has become Core's, one of their flagship properties, and it continues to grow, and they continue to do extensive exploration programs each year there. They keep finding more stuff. They've added some more land to it. So so once I think when Copalquin is clearly that type of district scale potential that we see there, we see it as having that potential from what we see so far. We just need to demonstrate it a bit more with the drill bit and some more understanding the geology all across the district there. But then, when it is at that scale, then it obviously is going to be of interest to a larger company to put a very attractive property into their portfolio for future resource growth.
It's not something you're looking for right now because you think the company's undervalued, or how do you? Why is that not something you would want to be looking for right now?
Because we've got the cash there. We've told our investors this what our plan is, and we want to execute that plan first. So we've got the cash in the bank. We've got the plan. We've got the geological smarts to do it. So we need to test it and demonstrate that it is what we say it potentially is. So I think this next 6 months is going to be important. An important stage for the development of the Copalquin property. So, we've built up a huge amount of geologic information over the last 12 months, done a lot of work over the district. I mentioned before, we've done that detailed mapping and sampling over 20 square kilometers now. And we want to get that aerial mag survey flown, because that's going to give us some very useful information and can help us complete that initial picture of what we have there. And then, we're excited and confident that we're going to get some good results in the next 6 months of the program of work we got there. That'll really sort of get the attention and demonstrate that Copalquin is what we believe it to be there.
Mm-hmm. Are you more excited or more confident?
Both. always been excited about it, but that's really when we first looked at it back in 2017 as a private company, we were just astounded at the persistent high grades all across the district. I mean, the gold grades, particularly where there'd been some drilling done, which was near Target 1, they were just exceptional. I mean, it's very high grades and good sort of intercept widths, and that's what really got us excited. Like there has to be something big here. It is a big system, and everything we've done to date has sort of supported that. But we've tried to we've stepped back a bit over the last 12 months to sort of think, okay, let's not get carried away with this. Let's just do the quality geology work there. That's under the guidance of Colin Jones, our technical director. That's been important in supporting what we plan to do over the next 6 months, which is demonstrate the district scale that we have there at Copalquin.
Mm-hmm. Do you feel like you'd need more land for that district scale strategy, or are you kind of done picking up more land for the time being?
Look, if there's something in that, like with Dura, that's in the same geologic regional system there that we have at Copalquin, then we would certainly look at it. We don't want it to be, not if it's going to be expensive or take money away from what we're planning to do at Copalquin. In 2026, we wouldn't do that. But certainly if there's a chance to option something like we did with Dura, which didn't cost us really anything to do it, in terms of taking money away from Copalquin, then that's the only thing that would make sense at this stage. But right now, we've got with Copalquin, the district that we have there, we've got plenty to go on with. We haven't even done any work in the northern half yet, and we'll start to look at that in the first half of next year. But we see some historic mining activity up there. We see there's some good alteration areas there that's indicative of some hydrothermal activity down deeper. So there are some good, it is prospective. It's certainly worth looking at, and could potentially be quite significant there when we do a bit more work on the ground.
Yeah.
So Copalquin's still got plenty of upside besides the southern half of the district where we've done most of the work in that what we call the district middle trend. There's still the southern trend there to do a bit of work on, and there's the northern trend that we see there. There's been a potential for further resource or deposits up there in the northern half.
You don't need to pick up more ground, though, right? I mean, if the strategy still works with the ground that you have right now, right?
Yeah. It would have to be something exceptional to take us away from the focus of what we got at Copalquin. So we've got so much to do still at Copalquin. I mean, it always comes to that, and that's sort of why we delayed, doing something with Dura. We didn't really need to do anything with it in the last couple of years, because it's like if you've got before we put that large chunk of cash in the bank in July, it's like, well, if you've got $1 million, where would you spend it? Well, it would always the answer always came back, we would spend it at Copalquin.
Yeah.
So if we're not going to spend money on something, well, why pick it up and just have it sit there and being an expense, in terms of paying the concession taxes and having to meet the minimum expenditure commitments. So that's why it did sit there, and now we don't have significant expenditure commitments to advance Dura. It made sense to bring that in and not be a distraction in terms of money or technical expertise. We can apply the technical efforts or knowledge we've developed at Copalquin and could easily apply those over Dura.
Is your G&A going to go up in any form? Because you said it's not going to be a brain drain to Dura, but are you going to have to hire some additional people to deal with it?
Yeah, I think we'd want to hire. I'd envisage hiring at least 2 senior Mexican geologists would be the sort of the initial effort we would make there in terms of doing the field work at Dura. So the LiDAR and the MAG survey would be in the order of $100,000 to get those done, and then we would do a field program there, and that would be the budget for that would be probably around $70,000 or $80,000 thereabouts.
Mm-hmm.
So not a big expenditure. And then we said we would spend in the second year there at least $200,000 on exploration, direct exploration work. So that would then would be continuing on the field work, and maybe increasing that a little bit more and putting some more boots on the ground if it warrants it from what we see in the first year of work.
Silver's been on a massive tear recently. Not a lot of juniors are participating. Do you think some of that might have to do with just the junior market? Do you think it is something that has to do with marketing? Is that something you want to spend more money on? That's why I'm asking that. But yeah, what do you think about that?
On Mithril's marketing?
Yeah, Mithril's marketing. And do you need to spend more money on marketing in order to be participating in that massive rally that we're seeing in juniors right now?
Look, I think you can spend an awful lot of money on this, and some juniors do spend a lot of money on marketing. We do spend money on marketing. We do, I get to the different key conferences around. I've bumped into you a few times over the last 12 months. Some of the key mining conferences. So that's been important for keeping in contact with our not only our major shareholders but also bringing new ones on. We want to get some buying on market, but we want, because we know we've got a good quality project. We want to spend the money on proving the district and getting the results out there. So we've had a reasonable news flow. It hasn't been as much as we expect it's going to be in the first half of next year, and that's just because of where we are in getting everything prepared for the drilling and bringing the third drill on in 2026. So, but we can see, we've had some exceptional drill results in the past, and it has moved the market, moved that share price considerably. So we know that when you do put out some good results, people do get to know about them, and it does translate into volume and share price movement. So really we're focused on getting getting prepared to get the drill results and the news flow that we're planning to have in the first half of next year.
Yeah, and that makes sense. Drill results are the best marketing in the end, as they say. So that is a good point. What do you think is the biggest risk for Mithril from this point on? And I know I asked you that last time, but what about now? What is just going forward with the strategy and everything we've talked about so far? What is the biggest risk?
The risk is always running out of money. I mean, you've always got to be looking at the expiration plan has to also include when do you. What's the cash balance going to be? When do you think you're going to be able to put some more cash in the bank? We talked about the warrants before. What's the likelihood of those being exercised? What's the timing on those? So that's always that's always something that we're working on really every day. So that's for a junior, it's always it's running out of cash, or you're letting the cash balance get too low that you look like you're then going to be you're going to need to raise money, and you're probably going to do it at a discount, and all those sort of things that sort of start to creep in, and then that affects your trading and your share price. So we've got to be staying well ahead of that, and always managing the news flow, managing the cash very well. That we're always well funded to do the key work that's going to keep demonstrating and expanding the resource potential of this district.
Mm-hmm. What do you think there's a risk that maybe Target 1 and the resource there don't materially improve the story to an extent that the market cares? Do you think that's a risk?
Look, I think what's important with that is that we're at the same time as doing that. We're going to be drilling at Target 3. Some more drilling at Target 5, start to bring that up. So there'll be 3 things going on there with the drilling. Besides, in addition to that, I talked about before, the testing some of these key structures in the district. So that's why we see the first 6 months of 2026 as being really key in advancing the story there at Copalquin. So it's not just the Target 1 resource. In parallel to that, we'll have done a reasonable first pass drilling at Target 5. We'll have started drilling at Target 3. We've got the ongoing program across the district, and then we'll be testing some of these key structures there. So it's not a one news item sort of story there. It's multiple stories going on in this one big district.
Well, has that also been part of the criticism? Like, what's the most fair criticism of Mithril that you've heard from your maybe your bigger shareholders, the smart money as people call them, since we last spoke?
Look, the bigger shareholders, can see the district scale potential we have there and want us to, start drill testing some other target areas, particularly target 3. So that's so not, they don't want us to rush into it and do it. Didn't say, well, you should have been drilling it last year. Like, understand that we've got to take the proper steps to do it properly. And when you got guys like our technical advisor Colin Jones there, who's well known in the industry, guiding things sensibly, then that gives a certain level of comfort. At the retail part of the market, because we put out that top 20 drill hit in September last year. That was 30 meters at over an ounce gold equivalent from surface. I mean, there's the other end of the market, particularly the Aussie market, want to see more of that. And we could try and drill those holes just for the market, but they're not going to do anything for the long term, development prospectivity for the district. So we don't want to do that type of work. We want to keep, we've done the groundwork, so it's been a bit dull, I guess, for the last 12 months. Well, we've had some really good results, just in terms of channel sampling all across the district. We've had some really good drill results as well. But it hasn't been the bonanza of news flow that's, to kick this along. And, but really we've been preparing and getting ready for this important first half of 2026 to really move things along. And as it turns out, that may be the ideal time in the market to do that, particularly with the silver price, getting up as high as it is now. But there still seems to be, I still sense a bit of nervousness or reticence in the market at the lower end. I mean, some have moved very well on a story, and there's some great stories out there, and certainly some really good potential in some of the approaches that these different companies have, and depends where they are. But there still seems to be, there are some where you sort of scratch your head about why aren't they valued a bit higher, and other ones which are valued very high, and you think, why are they at that high in their journey? So I think because at Copalquin we have got something that we've done a lot of work on to date, and we have got some good analogues in the region. We're confident. You had that question for me before about being confident. Yeah, we are very confident in what we've got there. So we're not worried about it. We would like to see our share price a bit higher than it is now, but at the same time, we're also in a very good position technically with the property and with our cash balance, that we don't need to do anything knee-jerk right now to address something that's going to get taken care of over the next 6 months.
And I'm sure we're going to have catch-up conversations in the meantime, or right on the back of that when you have some assets to talk about. What am I forgetting to ask you here today? What did you come here hoping to talk about that I failed to bring up?
Look, I think we've talked about everything really. There's been a bit of time on Dura, which is very good, and it's great to bring another property there. That's it's got it makes sense to bring that into the company at this stage, and also our plan of work for Copalquin, and particularly how important the next 6 months is going to be there, and that we have got we've got a clear plan now. We've done the groundwork over the last 12 months to support the more intensive drill program we've got planned for the first half of next year. So really just to this is the time to be looking at it. Those who want to take a bit of a punt now and get into the stock while it's looking quite at a good price, then there's could be rewarded with a very good news flow in the first half of next year.
Good. Well, I really am looking forward to our future conversations, but this has been a pleasure. Thank you so much for doing this.
Thanks, Antonio. Good to chat as always, and good to see you again, and look forward to chatting next year.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."